All right. Well, good afternoon, Joe.
Hi, Mike.
How are you today?
I'm excellent.
Tell you. So we are here. This is our 12th episode of the Mortgage Update with Mike and Joe. We're super pumped to be doing this live
And
from
on a special location.
on Skaneateles Lake.
We are actually currently sitting at the Sherwood Inn,
The Sherwood
right
Inn
across
is
from
a
the lake.
beautiful spot. Today also marks really the fourth year that
Yep.
we have been in Central New York, and today we're having our fourth boat cruise where we invite some of our referral partners and realtors to join us. We're excited. It's going to be fun.
It's going to be
Looks
great.
like we had a great night, and we really want to kind of pause and thank them for their support because we wouldn't be here without that.
Absolutely.
So we're excited about that. So, Joe, I know you got a couple little tidbits to share with everybody
So just
regarding the lake.
the name Skaneateles. Have you ever thought about what the name Skaneateles means? Or maybe you already know.
You know what, Joe? I don't know.
It actually means long lake.
Long
so
lake.
Skaneateles got its name. It's an Iroquois name.
Okay.
It means long lake. They also named the Finger Lakes because they appeared like a handprint to
Okay.
them.
That's
So,
right.
that's just a little piece of trivia that
That's
a
a great
quick
little
research. It's
something to
actually,
share.
and it is a long lake. I believe it's 16 miles long.
Okay.
So-
Cool. And it is a beautiful place. So if you've never been here, I encourage everybody to come and see it. It is an amazing place.
Especially around Christmas time.
Yeah, it is. Yep. You got right. They do a Christmas carol and people are decked out and it's really, really cool.
Or the tour of the lake, which we're about to do, which
Right.
is also pretty awesome as well.
Exactly. So listen, let's jump into real estate, the market, etc. Market continues to be hot, Joe, but can you share just a little update on what we saw in June?
Yeah. So, looking over these numbers from June and then also taking into account they're from June.
Mm-hmm.
So, in the month of June in Monroe County, we continued to be have high percentage over list, right? We're
Right.
17% over list. Now there was, and when we look at this data, we advise, now we've started sharing this data out.
Right.
You have to look at what's going into the data. There was one home in Rochester that sold at 80% over list. So if you remove that one out of that average, it takes it down to about 14.5%. So this is the time last year, and I don't like to open up sore wounds for you, Mike, but around the time that you sold your house last year, where we saw offers coming in the month of June or late June, early July, where those numbers really started to dip.
Mm-hmm.
And through some conversations with agents earlier this week, coming off of the 4th of July week, I heard there were 140 homes that were past delayed negotiations.
So that's a big increase over previous weeks.
Correct. And that model of the house flying off the market right away, right? Getting past delay. Now, again, we were coming off a holiday week. I think some realtors did plan for that as well as how they set their delayed negotiations up. But that to me is a great time if you're a buyer.
Mm-hmm.
If you've been on the sideline, yes, interest rates are up, but if you've been wanting to buy that house, this is kind of your window here, right?
Yeah.
That the market's, it's not cooling off completely. It's still hot, but it's there's more opportunity.
Right. I think, Joe, you bring up a great point. I mean, today we got some good news regarding the inflation front.
Yep.
So at least it moved in the right direction. Rates ticked down a little bit. So that's going to help a little. But going back to your point, this is a great time for you to re-engage with your buyers. We have numerous buyers that have lost out on homes. And, if what happened last year occurs this year, it's going to be a great time for a buyer to re-engage. That's what we're doing. And we're working with our agents to make certain that those buyers get their updated pre-approvals, cash pluses, so that they're in the best position to win.
Yep, absolutely. So just a couple highlights, those hot pockets like we talk about in Monroe County, the 14622 zip code, we had 3 sales in that area. They were going on average for 28.9% over list. 14450 was very hot for the month of June for us. We had 8 sales in Fairport. And the average was 27%, roughly 26.95 over list. I will say, for the first time, we had 2 appraisal issues in Fairport.
Mm-hmm.
And, It's just the
But
market.
both those
right?
transactions
Both
closed.
those transactions still closed, but they did come in short. The buyers had given the appraisal guarantees to cover
Right.
the appraisal gap. So, but it, just first time we've seen 2 in one zip code come in.
Right.
So that was kind of important to note there. And then in Monroe County and surrounding counties, there were 2 out of 130 transactions that actually sold under list price.
2 out of 130.
2 out of 130. That means 98.5% of the sales were at or above list.
Right.
So just
How about here, Joe? What'd you see?
so
in-
Onondaga and
Yeah.
surrounding, we were looking at the average for Onondaga and surrounding was 7% over list. So not as high as Monroe, it follows the path.
Sure.
The 13135 zip code was the highest at 42% over. And then in Syracuse, 13224, we had 2 sales, 27.5% over. 4 of the zip codes were over 20% in Onondaga and surrounding. So just a little bit of a different market that we're seeing. We're seeing more FHA, more government business being accepted out here, which is great.
That's
because
great
that's
news.
An underserved community. VA, FHA, USDA, et cetera. So, it's a tale of 2 markets, but I think we're crossing that point of the year where it becomes a tale of 2 years as well, right? The market, that little shift that we're seeing in the market is coming. And if history repeats itself as it did last year, there should be some opportunities for buyers specifically looking to buy right now.
That's great. That's great. So listen, we're going to make a little segue here. So we're excited to introduce what we call the GRB Power Tools.
Oh,
So
I forgot to bring my drill.
I know,
with me today.
I'm always walking around with a tool belt around my house. That's a joke. I can't fix a thing.
But you walk around the toolbox anyway.
Yes, I do. Yeah. So one of the things though that we want to do is that what we have found, Joe, you and I probably hosted, at least probably 25 different workshops with realtors, and they continually ask us, about. They want to learn more about our products, our programs, and about our tools.
Yeah.
A few months ago, you talked a lot about, how the Cash Plus program works and how that can help buyers win. What we are going to be doing here at GRB is we're going to be putting together kind of a library of content that goes through each of these power tools in a very quick, succinct way so that the agent knows how to use them and frankly helps them sell more homes.
Yeah, absolutely.
So the first one that we wanted to talk about was, the GRB Mortgage Express app. We've had it for how long, Joe?
We rolled it out right before COVID, actually, which was a godsend, right?
Okay.
Because we moved into this world of going from face-to-face meetings, taking those applications face-to-face, meeting with customers, into a virtual world. And had we not had our GRB Mortgage Express app, it would have been a lot more difficult. So, what the GRB Mortgage Express app is it's our online application.
Mm-hmm.
It has a feature where I can partner with a real estate agent, and they can share my application with the customer that they're sitting with, so they can complete it right there. I get notified as soon as that gets shared with the customer. I also get notified every time the customer opens the app, which is great because now I can kind of stalk people without stalking them.
And Joe, and too, we also, we always get asked, what's my payment on this house? What's my payment on that house? And the app can help with that
you beat
too,
me
right?
to the best feature. It has a calculator, and you can go in and run numbers on that calculator. We can issue the pre-quals through the app, so that buyers or agents can go in and update their own pre-qual,
right,
and reprint it or regenerate it, as long as it doesn't go over the maximums that we set. So a lot of features that, again, can be utilized within the GRB Mortgage Express app. So including like we talked about, the calculator, the notification. So if you're a partner of mine and we talk to a customer, let's say in January, and they went on the sideline for a little while.
Right.
Now they, I want to run some numbers. I saw a house I like and I want to put some numbers in the calculator. You're going to get notified as soon as they open that app up. And so am I. So one of the two of us could pick up the phone and say, hey, I'm just checking in to see how things are going. When in reality, we know they just open their app.
That's cool. Yeah. So what we will be doing is we will be pushing out basically a reel, if you will, as well as a video that shows each agent how they can use this and how they can actually help them track their clients. The calculator tool is huge. So this is just one of many tools that we're going to introduce to you every single month.
All right, so Mike, in addition to the GRB Power Tools, another segment that we're interested in or excited to add to the podcast is just the home buyer preparation, right? How do you prepare for buying a home? And within this section, we're going to talk about just different, not only things that are coming down the pike as far as changes, but things like I'm changing my name. I got, the topic we're going to talk about today is student loans, but different things that you need to do as you're preparing to go down this journey of home buying. So on the topic of student loans in the news, and I'm sure you've seen it, right? There's 40 million buyers or borrowers are about to resume repayments on their student loans. And student loans are the second largest debt after mortgages, second largest household debt after mortgages. And what the studies show is that in 2019, on average, tens of millions of borrowers were paying between $200 and $299 a month in their student loans. So what they're anticipating is that nearly $10 billion of payments that need to be made to these student loans are going to be kind of coming out of borrower spending.
Right.
Because now, we've had almost 3 years now of not having to make these payments because of the COVID forbearances that were just forced upon everybody. You didn't choose it; just your student loans got deferred. And initially, from the mortgage side of things, we had to kind of scramble to figure out how do we make this work? Because now we went from being able to use an income-driven repayment plan to having to use 1% or 0.5% to qualify for the housing payments. Now we're going back the other way.
Right.
So the biggest thing that we're advising people on now is if you want to buy a house in the next year or 2 years, the best thing that you can do for yourself is get yourself onto one of those income-driven repayment plans. Because we've seen income-driven repayment plans that have, a balance of $40,000, let's say, which if we had to use 1%, we would have to use $400.
Right.
Or if we used 0.5%, we would have to use $200. In some instances, based on the income level, that payment could be zero. It could be $50, right? So it makes a big difference in qualifying and buying power. The key is that you have to be on that plan at the time of closing. It usually takes 3 months or so to get onto the plan and for it to start. So if you were thinking of buying a house in the fall, it would behoove you to start that paperwork now to get on that income-driven repayment plan so that in the fall, when you go to qualify, you're qualifying based on that lower payment versus the 0.5% or the 1% of the student loan that we have to use.
Right.
So I know that this is going to become in phases. There's still some things up in the air with the different plans and legislation that they're trying to pass. But right now, as it's planned, within the next month, I believe it is, that all these student loan payments need to come back in. And, it's going to have some impacts on, like we talked about earlier, right? Consumer price index came down because people are spending less and the cost of goods isn't going up as quickly, right? So now there's people spending even less because now they have to make payments to their student loans, and that takes a lot of money out of the economy.
Right, it does. And I think, one of the things that I know way back in the day, about 5-6 years ago, we used to just host workshops just specific to student loans and understanding options, understanding how those student loans could be restructured. Because just because you contact your student loan provider doesn't mean that you're getting the best response. So I think we're gonna have to dust that off and get out there, get in front of it so that we can inform our realtors, their clients, so that people can make the best financial decision.
Yeah.
So, okay, great. One thing that we just want to kind of, close with is that, we're excited to be here, but next month is a big month. When we come back and we do our August podcast, we will be doing it live from the Buffalo Bills training camp. So the journey begins, Joe.
It starts.
The journey begins.
We're going to have some new fun segments on the Bills.
I'm excited. You got to dust off your hat. Got to bring that back.
Yep.
So we're super pumped about bringing back the Bills, again to our podcast, and as they embark on their Super Bowl journey. This is it.
This is it.
So, All right. Well, again, thank you for listening in. We're excited. Joe and I are going to go out and greet the agents that were kind enough to join us for the boat cruise tonight. And we'll talk again next month.
Thank you.
Okay. Thank you.